Welcome back. So the cues have been very positive across the global backdrop. Not that it's helped our cause, but let's see. The implied open is suggesting that we'll actually start lower. And this is despite the fact that most of the major markets, you've got Japan, you've got Hong Kong, they're actually all positive if you look at it. But let's see. Bulls have had a tough hand over here. Now, let's boil it down to individual stocks. Lots of earnings have been coming through. So we've got our team standing by with the CNBC-TV18 list of top stocks to watch. Hi, guys. Morning to all of you. Manglam, let's start with Lever. Actually, I don't even want to ask about earnings. I can probably start with Minimalist.
Let's start with Minimalist, but earnings also can be clubbed as Minimalist only, largely because the expectations itself were, so muted that the company reported muted set of numbers. So let's actually, drill down to numbers, and then I'll talk about Minimalist in just a bit. Largely in line with very muted expectations, net profit boosted by a one-off of close to around 509 crores because of the gain on the sale of Pureit, and the management expects moderation in consumption sentiment to continue. This against expectations of gradual recovery coming by as well. Revenues 15,400 crores. The street was working with 15,600. EBITDA largely in line. Net profit boosted by that one-off. Volumes absolutely flat, 0%. And it was led by home care revenue, but all the other verticals of the company underperformed as against street expectations. The only, saving grace were the announcements that came by beyond the balance sheet. One was the acquisition of 90.5% stake in the business of Minimalist at a valuation of close to 3,000 odd crores. Annual revenue run rate of 500 crores doesn't move the revenue needle as much, but the important part is they are not buying a capability or the products of Minimalist. They are buying the customers of Minimalist, and they're buying the brand positioning of Minimalist. So that could do well in their beauty and wellness business going forward. So that's something we'll keep an eye out on. But on these numbers, does the stock fall or does the stock rise? It's anyone's guess because it's fallen by about 22% from the highs, trades at around 46 times. There hasn't been any sequential recovery in earnings, but at the same time, the stock's already priced that in. So expect flatness in the stock to continue as well.
Okay, all right. Manglam, thanks a lot for that. Let's hop across to Abhishek. He's here to tell us about HDFC Bank. Abhishek, morning.
Morning, Nigel. So HDFC Bank in its con call yesterday did sound the same way that SBI told us that the condition or macro environment is very tough. So very challenging macro environment is what MD of HDFC Bank said in the con call. He continued to say that, there is very tight liquidity conditions, signs of moderating urban demand with tepid private capex programs as well. There is huge volatility and depreciation of INR, which is hurting the, economy. Capital outflows from equity and debt market is due to uncertainty around the new US administration. However, on the positive side, he did say that, some of the demand of rural is picking up and government spending is also picking up. Strength in services exports and gradual moderation in inflation is seen. They have maintained tight leash with respect to cost of funds, which is helping them around in Q3 and going ahead as well. Back to you.
All right, Abhishek, thank you very much for that. So that's those are the two big ones, right? Lever and HDFC Bank. But there are more. BPCL reported numbers as well. Sudarshan is here with details. So good morning.
Morning, Prashant. So headline is earnings are a miss in Q3 versus expectation of healthy set of earnings for Q3. So talking first about the factors that didn't work for the company. First is company had announced closure of 2 refineries for maintenance in October and November, and it's likely that the impact of that closure is more than the expectation. Second, company has reported higher inventory losses in marketing segment versus expectations of some gain. And third is LPG under recoveries has increased by another 3,000 crore. So in 9-month FY25, total LPG under recoveries are now at rupees 7,200 crore versus 4,000 crore that company had in H1 FY25. And the factors that have supported earnings are first, strong petrol and diesel retail sales, and second is crude was stable in Q3. So now talking about the numbers, EBITDA has missed estimates by nearly 9%. Margin has come in at 6.7%, that is 70 bips lower than estimates. GRM has improved 120 bips sequentially, but this is also 140 bips lower than the expectation of $7 per barrel. Brokerages though are largely positive. Citi says it maintains positive outlook. Q3 results were not good as expected, but outlook is positive and valuations are attractive. It also says any correction in the stock will be a buying opportunity, and budget will be a key budget will be an important event and it would be a key to monitor for OMCs, considering there is an expectation that government may announce that LPG under recoveries may be compensated, and that's the reason it will be seen closely.
Absolutely, Sudarshan. And looking at the BPCL numbers, we now know why they're talking about this compensation, right? 75% increase, I think, in the LPG under recoveries there. Thank you for that. Let's move on and talk about a couple of mid-cap IT companies that reported after market hours. We have Rima joining in to tell us how Persistent and Coforge did. Rima.
Well, Persistent and Coforge were the two outperformers in the mid-cap IT pack, and both have reported good numbers. Persistent is in line with street expectations on revenues. Margins were a slight beat. So top-line growth for Persistent came in at 4.6%. Margins expanded by 90 basis points to 14.9%, ahead of expectations, and that drove an increase in the company's profitability by 14%. Deal wins for the company have also been consistently moving up, and this quarter it's close to $600 billion. Now, the company reiterated its aspiration of achieving $2 billion by the end of FY27, but what is new is that the company has now introduced an FY31 aspiration of achieving $5 billion in revenue. So the quarter is good. The company continues to execute well. The stock was down 4% yesterday. Perhaps it could recover a bit. Coforge, on the other hand, has reported a very, very strong beat on the top line. The street expectations were for a 4.5-5% kind of a top-line growth. The company has grown by 8.4%. That said, margins are slightly lower than street expectations. The way the company calculates margins, they are flat at 11.8%, lower than expectations. But look at the other internals. Second consecutive quarter of $500 million of an order intake. The signed order book is 40% higher on a year-on-year basis. And the company, remember I told us 3 months back that this is going to be a standout year? Well, this time they're saying that even the next year is going to see robust and sustained growth. So keeping the faith in Coforge. Back to you.
All right, Rima, thank you very much for that. I mean, as we said, these are companies we'll speak with. We'll have Sudhir Singh, CEO and Executive Director at Coforge, join us at 9:30 for a conversation on the numbers. Let's go across to Mangalam once again and talk about Pidilite, which reported as well. Mangalam, morning.
Good morning. So the consumer sentiment is weak in that Pidilite has actually reported in line with expectations, but there's a good set coming in, largely because, there's subdued demand across rural and urban geographies. The companies stepped up their ads and promotion spends as well. In light of that, a revenue growth of 7.5%, an EBITDA growth of 7.5%, and a net profit growth of 9% is something that the street would like. Revenue at 3,369 crore. The street was working with a number of a little over 3,300 crores as well. 800 crore of EBITDA, margins in the band of that 20 to 24% that the company keeps guiding for. Yes, on the bottom line, there has been, a miss versus expectations, but that's nothing really to worry about. The total volume growth has been around 9.7%. led by consumer business volume growth of 7% and business volume growth of close to around 21% as well. In this environment, these would go down as slightly better than expected. So see, no more than a mild green on Pidilite, though it'll be further boosted by the fact that oil is down to about $78 as well.
Okay, all right, got it. So Pidilite, hopefully some green over there. Mangalam, thank you for that. Let's go across to Vamakshi. Go Digit Insurance reported numbers yesterday. Vamakshi, tell us how they were.
Well, a good set coming in from Go Digit. When you look at the gross written premium, that saw an uptick of 10% coming in at 2,677 crores. The NEP growth, however, was rather slow, up only 5% on a year-on-year basis, coming in at 2,084 crores. Now, largely the slowdown in NEP growth is mainly on account of a couple of factors. The first one being change in the counting method for long-term premiums to 1 to N, 23% year-on-year decline in crop NEP, and low single-digit growth in motor segment NEP, which was somewhere around 6% year-on-year. On the other hand, we saw that the claims ratio actually improved to 72.9% as compared to 74.5% year-on-year. The expense ratio also improved to 35.2% as compared to 35.8%, and resultantly, the combined ratio improved both on a quarter-on-quarter as well as year-on-year basis and stood at 108.1%. Resultantly, the profitability of the company saw a very good jump, almost up 74.1% at 118.5 crores. Overall, a good set coming in from Go Digit.
Okay, all right. Thanks a lot for that, Vamakshi. Well, Gravita is the stock that I'm looking at, and they came out with a set of numbers. Top line growth of more than 30%, and their other income, which for them, it's part of the operational performance as well. That was much higher, close to around 80%. That gave you the EBITDA, including the other income, at around 110 crores approximately. That's more or less in line with what MK put out. And the margins at around 10.7%, that's par for the course. Well, on a year-on-year basis, it's a little bit lower, but it's almost exactly what the street was anticipating. Profit number came in much higher though. That's because the effective tax rate was a little bit lower. So the stock, in fact, recovered in yesterday's trading session. Expect the stock to open up mildly in the green in today's trade as well. Well, let's move back to Vinny then. She's here to tell us about Zydus Life. Vinny.
Good morning. So, Charlie, we are keeping an eye out on Zydus Life today because an important announcement that came in was that the US FDA has now announced orphan drug designation for one of its drugs, that's Usnoflast, and this is mainly used for the treatment of ALS. Now, Usnoflast is a novel drug, which is a very what does this mean, orphan drug designation? It actually means that this is for the treatment of rare disease, and what US FDA wants to do is make this drug available for a lot of patients that are actually getting impacted by this. So it's a bit of a positive in terms of a sentiment that comes in for Zydus Life. Now, Usnoflast is also something that was studied for other treatments as well. Preclinical trials were done for neuroinflammation diseases, other types of diseases as well, and that already received orphan drug designation for Usnoflast for the CAPS disease previously from the US FDA, and now it's also come in for the ALS disease. So surely something that is positive coming in for Zydus Life, especially in terms of sentiment-wise.
Okay, all right, got it. Vinny, we'll watch out for this one. Zydus Life on the radar as well. And finally, let's look at HUDCO. HUDCO seems to have come out with a really good performance. Abhishek, tell us the details.
Well, HUDCO has signed an MOU. This is with Vadhan Port project, that is VPPL, which is a JV between JNPA, that is Government of India entity, and Maharashtra Maritime Board, which is an entity of Government of Maharashtra. So HUDCO shall explore and provide funding of up to 25,000 crore for the development of new ports and PPP projects of VPPL. With respect to the numbers were really on the stronger side. Net interest margin expanded on a sequential basis to 3.19% versus 3%, and that is albeit on the fact that their yield actually increased massively on a sequential basis. So interest income was up 11 to 12% quarter on quarter versus 7% AUM growth that you saw on a sequential basis. Asset quality has improved. Gross NPA ratio is down to 1.9 versus 2% in the previous quarter. Disbursements are up 11% on a sequential basis, and that also drove the AUM by 7% on a sequential basis. Back to you.
Okay, all right, got it. Thank you for that, Abhishek. We'll be, in fact, touching base with the HUDCO management, talk about this extremely strong performance in the third quarter and their tie-up in terms of funding port infrastructure with the government of Maharashtra. Discuss all of those details in a bit after, just around market opening.